as I look at the story, you're structured as a holding company. That's the way you want investors to view it. You're not structuring it as a large recycling conglomerate necessarily. Kind of walk me through that strategy and why you chose that model.
That's right. We think like the investment holding platform is really attractive to be able to remain relatively lean and invest in like the best assets, both in Europe and the US. It's a pretty small universe of buyers. You saw like on the value chain chart, like on that second column, a lot of like the companies acquiring feedstock are pretty big because those projects are expensive. Mm-hmm. And so they want to have feedstock providers that are global because those companies are global. They have assets in Europe, they have assets in the US. And so I think having like a relatively lean investment holding with significant participation in operating companies with assets on the ground give us that opportunity to be a global company and to help our partners wherever they have assets.
What was the vetting process like working with Exxon and Lyondell to I guess vet the technology behind your recycling?
I mean, it was a very long process. We started working with Exxon, I think in 2019, 2020. And at the time our business model was like to provide companies like Exxon with our technology under a licensing model. And Exxon decided to build their own technology platform, but they were very interested in our expertise on the feedstock side. And so we worked with them to understand really like the specs of their technology platform over 2021, 2022. And when we really had like a good handle on like, what kind of like sourcing and processing effort would need to be built to be able to feed the operation, we decided to open it to other players, and we brought in LyondellBasell in 2023. After like many months of due diligence around like, the technology and the value creation that we were offering, we reached like an FID in November 2023 for the first circularity center. So at the beginning, Agylix had 100% of Cyclics, and Exxon came in for 25%. In November 2023, Lyondell came in for 25%. And there was like a 135 million capital raise to fund the first circularity center. So it's been like, great to work with those partners. They're obviously a very big organization with a lot of like expertise, very thorough. So it was like a rather long process, but the scale of the opportunity and the scale of like the investments require like a strong vetting process. So
that's great. What excites you the most about the Green Dot investment? The access to their customers? Like, what drove that? Was it a competitive bidding process? Were there other companies looking at that, making that investment?
So I think it was we've been working on the transaction for like 18 months. It's kind of like a natural partnership in the sense that there are not that many players. Like as you saw in the value chain chart, there are Cyclics and Green Dot in that bucket. There are like some other companies that have some assets in that bucket, but very few like fully focused on that. And you tend to see like kind of like, bigger waste management players just too small for them. They don't really have like the know-how around the technology of recycling. So it's not really like worth for them, like, and their business is more about like landfill,
right?
Not really like, so they are not really interested by that at this point. And then there are limited companies who had like, operation that really understand like how like, the chemical composition of the plastic waste feedstock you're going to use in your recycling project matter for the yield, matter for the contamination, matter for the success of your project. And so naturally, because there are not that many players who ended up talking, and we are like primarily focused in the US, they were primarily focused in Europe, so there was no kind of like competition really. We were talking to the same customers, so it kind of like made sense, and it was like a bit slow to like put together, but we're very happy so we announced that in July, and we're closing later this month.
That's fantastic. You have a unique perspective with operations both in Europe now and then in the US. Maybe you could talk a little bit about the divergent, maybe regulatory paths that the two markets are on, and what some of the challenges are maybe dealing with feedstock here in the US versus the feedstock that you might be seeing in Europe.
Absolutely. There are like some difference. So the generally like, collection infrastructure is more mature in Europe. Like in Germany, especially like the collection process are just like better organized in a way, which generates cleaner streams of plastic waste. Whereas in the US, depending on the states, it tends to be like more mixed together and a little bit more contamination. So you require bigger processing facilities. That's like kind of like like the similar to the one Zacks is building, like where each facility takes in like 180,000 tons of plastic waste inbound, and then 100,000 of that goes to advanced recycling, 50,000 of that goes to mechanical recycling. But you need like scale because it is complicated, because it is very mixed, very contaminated. In Europe, you can access like cleaner streams, so you still need like that processing, sorting, advanced sorting step, but it's a little lighter in terms of capex. And the models are more integrated in Europe, where they have like the EPR scheme. So basically, the EPR scheme in Germany is extended producer responsibility. Is like you ask the companies that emit packaging to pay a fee to cover the cost of collection, sorting, and recycling. And the German government sets like, the quota. So they would say this year or for the next 3 years, it's going to be 80% of the glass needs to be recycled, 60% of the cardboard, 40% of the plastic. And then based on the cost to achieve those objectives, the companies emitting packaging needs to pay a license fee to the operators, so like a dozen operators. And so the system is very well funded. So we're seeing that happening in the US. Actually, there are many states in the US on the West Coast that are developing EPR scheme, but it is complicated and it takes time to build it. But I think the US will follow that. And then in Europe, you also have like a stronger regulatory push towards recycled content. In the US, you still have like a lot of companies that are interested in buying certified recycled resin because they made some commitments like, the Unilever, Dana, and Nestle, Starbucks. Those companies made strong commitment to their customers that they would use like 30, 40, 50% of recycled content in their product by 2030 or 2035. And so they still want to achieve those objectives. In Europe, it's a bit stronger because you have like a regulatory mandate to get there by a certain date with some penalties if you don't. So that kind of like, put like a bit of a floor on the market. Yeah. But we see like appetite for recycled resin on both sides of the Atlantic Ocean. It's just the market dynamics are a bit different. Right. So I'd say like all in, the regulatory framework is a bit stronger in Europe. That's why we see like a stronger expected growth rate in like the advanced recycling capacity in Europe. But we see also like a lot of like, projects, being developed in the US because even without that regulatory mandate, the economics make sense because the CPG brands are willing to pay a significant premium to access high quality recycled content. And that's the problem that mechanical recycle cannot really solve because they're produced by the nature of the process, a product that is a little bit lower quality that cannot be used for like, shampoos or cosmetics or pacifiers or thing where there is more usually brand value. And so that's kind of like the difference that I see between US and Europe.
That's interesting. You said it's sort of a small market, small number of players where everyone knows one another. What's the competitive landscape like right now?
On the feedstock side, on the conversion side?
Yeah, I guess on the feedstock side to start.
So the feedstock side is pretty limited. It's like, Cyclics, Green Dot, and then you would have like a lot of like MRFs and PERFs, like material recovery facilities that have like very clean stream. So they would sell that very clean stream to like off-takers, but they would sell it at like a much higher price. And it's not really scalable because you don't have that much super clean stream. So it's a very fragmented industry. So it's hard to have like, the exact numbers and the exact players. So you have a lot of those like, small transactions here and there, but big platform that can produce at scale, at spec. There is very, very few of those. Tomra is building a couple facilities in Europe, I think in Germany and Norway, but it's not the core of their business model. And then you have like a few other players. One of them is a Freeport and one who also did a partnership in Europe, but it's mainly to source their own operation. Okay. And most of the big petrochem company So they're very comfortable building those projects and running them, but they are not waste management companies, and they'd rather stay within their area of expertise. And so there's really a need for like players that can provide at scale, at spec.
That's great. And I think I kind of know the answer already, but if over the next 12 to 18 months, the milestones you'd be looking for as an investor, I think they're, probably going to be, the green dot closing and,
Right.
but maybe you can sort of highlight a couple of those that we should be looking for as we watch the company.
Sure. So, I mean, the closing of Green is the big one. We expecting the first circularity center of Zacks to come online first half of next year. So it will be also a big milestone. The second one coming online towards the end of 2026. And then we have like, right now, like, the German business of Green is doing really well and it's going to be relatively stable. We have that kind of like, as we see the advanced recycling capacity in Europe coming online, we expect the second bucket, which is the growth vector, the AR, like advanced recycling feedstock business, to really ramp up. We expect to reach profitability on that bucket next year. So it would be also like a big milestone. And in terms of capital markets activity, on top of our OTC listing, we're working to file for like a US dual listing as well in the US to give us a bit more liquidity. So that also could be like an interesting catalyst. And then it's going to be the growth beyond the first two. We want to reach FID on 3, 4. As I mentioned, we think we can access like cheaper capital. If potential lenders see like the first facility up and running, I think it would give us like a larger access to the debt capital markets to fund the following.
Great. I love a story like this where your costs are low, your inputs are low, there's plenty of supply, and then you convert it with customers who are already locked in. They're buying everything that you can produce. So that's fantastic. Are there any questions from the audience?
Yeah, the key question is from your website. You show 110 million shares outstanding. Excluding the top 20 shareholders, this is all from your website. You only got 2.5 million shares in the front. 350 shares trade a day in the US, 10 grand trade a day in Oslo.
Yeah, it's been a challenge. Like the liquidity has been limited because, as you mentioned, like we have a very concentrated shareholding structure. I think like the top 5 represents more than 85%. That's why we're like pursuing like dual listing next year, like another market in the US to gain like liquidity. And yes, the also stock exchange.
Big bond listing in the US.
The liquidity has been like a factor that has prevented a lot of investors from getting in the story.